In 1984, a man named Julian Vance sat in a room just like this, watching the global steel market collapse in real time. While every other chief executive officer was frantically selling off assets to save their skin, Vance did something that looked like professional suicide. He started buying, but he wasn't gambling. He had spotted a glitch, not in the stock market, but in the human brain. He realized that his competitors weren't reacting to data. They were reacting to a biological bug called loss aversion. This is the birth of cognitive arbitrage. It is the art of finding the gap between what is actually happening and what the panicked human mind perceives is happening. And if you know how to spot that gap, you do not just win the game, you own the board. Most people think wealth is built on hard work or better products. That is the lie we are sold. In reality, the highest levels of business are won through choice architecture. Think about Julian Vance again. He knew that the human brain processes a $1 loss twice as intensely as a $1 gain. By the time his rivals realized their fear had overinflated the risk of steel, Vance had already locked in the contracts that would make him a billionaire. He was not trading steel. He was trading on the predictable irrationality of his peers. This same glitch is why you will pay $10 for a subscription you do not use, just because the cancel button triggers a subconscious fear of losing access. To master cognitive arbitrage, you have to stop looking at the numbers and start looking at the lizard brain pulling the levers. Now, let's bridge the gap from 1984 to today. You see this everywhere in the tech world. Why do companies offer a free forever tier that they know will lose them money? It is not charity. It is an exploitation of hyperbolic discounting. We are hardwired to choose a small reward right now over a massive one later. By giving you that immediate win of a free tool, they bypass your critical thinking. You become emotionally anchored to their ecosystem. Julian Vance used this same principle to lure his suppliers into long-term deals during the crash by offering them immediate, smaller liquidity when they were most desperate. He traded a tiny bit of present-day cash for total market dominance a decade later. The arbitrage isn't just in the price, it is in the timing of the human ego. The hardest part of cognitive arbitrage isn't spotting the glitch in others, it's surviving it in yourself. Julian Vance almost went bankrupt 3 times before his big win. Every biological instinct he had was screaming at him to stop, to be normal, to follow the herd. This is where most people fail. They understand the theory, but their nervous system betrays them when the stakes get high. To outmaneuver the competition, you have to build a psychological firewall. You have to treat your own emotions as noise and the market's panic as signal. When you can sit in the middle of a storm and see a ladder instead of a grave, that is when you've moved from being a participant in the economy to being an architect of it. Julian Vance didn't have better math than his rivals. He just had a better understanding of the human animal. Cognitive arbitrage is available to anyone, but it requires the courage to bet against your own biology. If you're ready to see the glitches that everyone else is ignoring, you're already ahead of 99% of the world. But knowing isn't enough. You have to act when it feels most dangerous. If you want to see exactly how this psychological framing is used to manipulate the housing market right now, you need to watch our deep dive on the scarcity illusion right here. The glitch is still there. You just have to decide if you're going to exploit it or be the one exploited.